Start recording. Alright, so welcome to this session. We are coming to continue from the previous where we ended, which is on order block. So you said order block is valid when there is what? A break of structure in the market. You get it? So it's valid when it has a sponsor candle that takes out liquidity, either to the upside or downside, and then you see what a boiling move in the opposite direction. So I showed you guys what this our sponsor candle. So you see what when it's valid when the sponsor candle take out liquidity. You get it? So after taking out liquidity, then what we see a boiling move. So the boiling move that happened comes from what the confirmation candle, which what change the direction to the opposite place. Are you getting it? And most of the times these moves should be breaking structures in the market. So what I basically mean is what if we have this equal highs over here and the market retrace to the upside, this candle over here which moved or took out this liquidity to the upside should be what? It should be a bullish candle. Are you getting it? So this bullish candle is going to serve as what? As a sponsor candle for us. Then when you identify what the next candle that forms should be what? A boiling candle, or let's say an opposite candle of this move that took out the liquidity over here. Are you getting it? So when you see something like this and what it breaks structure, so you had this and see it took out, it broke the structure over here. Then what this place becomes what? An order block for us, a valid order block. Then we should be what? Expecting price to return to this place to mitigate these orders over here. Are you getting it? So this is basically what I want. And on the opposite side should do what? The same thing. You can see we had this equal lows over here. Price went up, took out this previous low over here. The buy stop orders or the buy stop liquidities over here. Then we see a reversal from this place, which led to a break of structure. And this place becomes what? Our order block for us. Are you getting it? So price, we should be expecting price to do what? To return to this order block to mitigate it and move to the opposite direction. Right. So we also spoke on the game box tool that we'll be using for this order block. So we said when price is trending, let's say we identify a bearish order block, basically should reverse to the downside. So we have discounted price, which is a 50% of the game box. Then the 0% should be what? Our premium price. And the price can what? Mitigate this premium price and move to the downside, or price can what? Mitigate the discounted price and move to the downside. Okay. So when it comes to what the bullish order block, also we can identify the same thing over here. We had this price forming what? High highs and high lows, and we saw that what price started what? Retracing to the downside. Then what? It created this bullish order block over here. So this becomes our last bearish candle before this move that led to the break of structure of this previous high over here. So we have the middle, the 50% over here becomes our discounted price. Then the 0% over here becomes our premium price. So price can choose to mitigate this 50% and go the opposite way, or price can choose to do what? To mitigate the 0% and move to the opposite way as well. Okay, so I spoke of some candles that also serve as a valid order block for us. So sometimes when you see let's say we are in the bullish markets. Okay, so first price, what we're expecting price to take out sell stock liquidities in the market. Then after price taken out, it should form another block over here. So this confirmation candle that form over here took out liquidity from what, either the body or the wick of this last bearish candle that formed over here. Get it? So you can see what, when price take out the liquidity from this sponsor candle, it becomes what, we have a stop hand. You can see this wick over here. Let's see, a lot of buyers started taking their position on this what bearish candle over here. Then what you realize, what this bullish candle started forming, then immediately you see what, let's say a minor spike or a wick. This wick, it formed a wick, or it created a wick, and this wick took out the liquidity below what this previous what sponsor candle and started moving to the opposite side. So when you identify something like this, I said you should place your what, your game box from where, from the wick of what this confirmation candle, which is the bullish candle, to what, the body of what, your sponsor candle. Get it? Something like that. Then you can have your retracement to either the premium price or the discounted price. So same thing applies over here. You can see we had this what, liquidity taken out from the wick of this sponsor candle, then price move to the downside. So you can place our game box from the wick of the bearish candle to the body of the bullish candle, and we expect what, price to retrace to either mitigate the 50% or the 0% of this order block and change to the opposite direction. Right, so basically this is how to use the game box. This is how to use the game box, and this is how to what, identify the other blocks in the market. So we also spoke on how to spot what, valid order blocks, how to trade order block as well. So with this, we start from what, how to spot valid order block. So yesterday I gave out some notes. I think I have to go over it again. So how to spot valid order block. A valid order block needs to take liquidity either from equal highs or what, equal lows, or it has to grab liquidity from another order block, or it takes the liquidity from an inefficient place, which we have already gone over it. I'm just giving out the notes. So what, a valid order block needs to take liquidity from either equal high or equal lows, or grab liquidity from another order block. Okay. 2, it takes, a valid order block has to take liquidity from an inefficient area. So sometimes when you get to the inefficiency topic, it's a topic on its own. We will be talking much on that. So let's say we have an inefficiency over here. We can identify another block within an inefficiency. So that's basically what I meant. And I'll be using the word mitigation. So mitigation is basically the market coming back to actually collect back the money at another block. You get it? So when the banks or institutions close their order or positions, price has to do to return back to that place to close that order that they took over there. So that's the mitigation. That's the whole idea of another block. Price has to mitigate another block and move to the opposite direction. Or it's just the market collecting money and moving in the opposite direction. So let's say that was a lot of buyers took their position. Maybe within this, the movement that led to the break of structure, their stop losses below. So price has to do to return, to take them out and and start moving to the opposite direction. Okay. So then we move to how to trade order block. this over here, how to trade order block. So you said when you identify another block on the bigger time frame, let's say the H4 or daily time frame, as I've already explained to you guys, you don't have to place your limits and wait for that price to get mitigated at that zone. But what you need to do is to move towards the smaller time frame. Then you start looking for break of structure or price taking out liquidity. Then other blocks on the smaller time frame. Then you can take your entry from there. All right, guys. So we have 1 minute to call this session. Then we'll continue with the other topic after this.